Kimberley Crook is chair of the New Zealand Accounting Standards Board. She's got an extensive background in accounting standard setting. Kimberley's a partner with EY, where she is the firm's national IFRS leader and part of the Financial Accounting Advisory Services team. So please welcome Kimberley Crook.
I'm here today wearing my standard setting hat as chair of the New Zealand Accounting Standards Board, and it's fair to say from a New Zealand standard setting perspective the issue of disclosure overload or disclosure ineffectiveness is a key issue for our board. It's something that we have recognised for some time. It's been a key theme in our comment letters to the ISB. I'm sure all of you are aware that we've had a lot of new standards over recent years, often bringing in increasing volume of disclosure requirements. And when we're responding to those exposure drafts, a common theme of our comments is, look, you really need to have a look at this to see really whether you need so many disclosures and looking at cutting that back. One of the things that we've been doing at the New Zealand Board is looking recently at our strategic plan, thinking about the next 3 to 5 years. What are the key projects, the key areas that we need to focus our resources? Obviously, we do have limited resources, so we can't do everything. But in thinking about what are the key projects that we want to focus on, disclosure is right up there as one of our key projects. So as you can imagine, we're very supportive of the ISB's project on disclosure that Ian's just outlined. In particular, the project that he mentioned on developing disclosure principles. Because it's fair to say this is something that we really lack in our standard setting today. I certainly know from personal experience, having worked at the ISB, that you do a project, you spend years figuring out what are your recognition and measurement requirements, how should you calculate the numbers, gets right to the end of the project, and then it's, well, what disclosure shall we have? Chat to a few investors, see what they want, and it tends to be rather ad hoc because we really don't have any concepts, any overriding principles that help guide us in setting those standards. So I think that project that sets the principles of disclosure will be a vital project for setting the scene going forward in the future. And some of the things that the New Zealand Board has highlighted, and particularly our recent comment letter on the Conceptual Framework project, which is also looking at the issue of disclosure, because as I've said, that's a big gap in our existing framework. Some of the things that we've suggested that need to be thought about is really looking at, well, what are we trying to achieve with these financial statements? If we think about the users of financial reports, what are we trying to do there? Because ultimately, the whole objective of financial reporting is to provide useful information to investors and other users of financial statements. So what should we be thinking about? We talk about general purpose financial reports, focusing on the common information needs of users. And we think it's important to think about general purpose and common information needs. Because the alternative is to focus on multi-purpose financial statements and individual user information needs. Go around and ask all the different users out there what they want, and you'll probably get lots of different answers because they've got different things that they're interested in. And therefore, that can lead you down a track for requiring, as a standard setter, more and more disclosures in order to satisfy those demands. Whereas we think the focus should be more on, well, what are the things that most people want, the common information needs, and that will allow us to focus on the information that we consider to be the most useful, the essential information, rather than just a proliferation of nice to have that just once in a while somebody looks at. The other thing we think it's important to think about is who are the intended audience, what sort of users. We've talked about increasing complexity of financial statements, and in some cases that reflects, of course, the increasing complexity of the business environment. And certainly in our conceptual framework, there is an assumption in there that the user of financial statements does have a reasonable knowledge of business, a reasonable knowledge of accounting standards, and is prepared to study the financial statements with a reasonable amount of diligence. So what does that mean? We're never, I don't think, ever going to get to the point where we're going to reduce financial statements to a 5-second soundbite, because that's the other extreme. And I think that's something we shouldn't be aiming for. But it's a matter of thinking about who are our users. There is research overseas that suggests that most retail investors do not read financial statements. Now, why is that? Clearly, the increasing length and that boilerplate disclosure, the technical jargon, is a key barrier to that. And that's something I think that should be our key focus. And I suppose that then leads into another thought about whether financial statements ought to be viewed as some sort of reference book, particularly in this day and age of the internet and putting up the financial statements there with lots of opportunity to add little links to things. Should we be looking at it that way, in which case we shouldn't be thinking about the financial statements as something where you can start from the beginning and read to the end? Or should we continue to get it back to where we would like it to be, which is a communication tool? So there should be a reasonable expectation that people can pick up a set of financial statements, read it through, and not feel that, that they lose the will to live, 2 hours later when they still have only halfway through the set of financial statements. In terms of how to resolve that, certainly we think that standard, some things I've mentioned are some of the key aspects to it, and those disclosure principles and having better set standards. We also think materiality is a key part of that, better application of materiality. And so we're particularly supportive of the amendments to IS1 that Ian mentioned there. That's the standard on presentation of financial statements. And at the moment it has a single sentence in there that says that you need not provide a particular disclosure if it's not material. And that's it. And so you can imagine if people were trying to apply the standards and then they're looking at all these other disclosure requirements and all the other standards that use words like at a minimum you need to disclose, and then there's a whole big long laundry list, then you can imagine just that single sentence is really not sufficient. And so we support what the IASB is doing in emphasising materiality, in particular the concept that just because an item in your financial statement, say sitting on your balance sheet, is material, that doesn't mean that every single piece of information that a standard might consider you disclosing is material. We also support the idea of developing materiality guidance that Ian mentioned there. They're going to think about doing that. We think that's a really good idea. It's something we've actually done here as a local standard setter for public benefit entities already. We have some constraints in the for-profit space because, of course, it's really important that we keep fully aligned with IFRS. But for the public sector and other not-for-profits where we have some more freedom, we have already developed some guidance around materiality because we recognise that this is an issue that actually it doesn't just impact on the corporate sector, it also impacts across the sectors as well. And I think all in all we recognise that as standard setters we are only one part of the process. And that's why forums like this today are particularly welcome to us, because we recognise that everybody has a part to play in resolving this problem. So obviously preparers, auditors, the FMA and other regulators and users of financial statements. We all need to work together to resolve that, and the NZASB is very keen to engage with all interested constituents in seeing what we can do as a New Zealand standard setter to contribute to that process. Thank you.